Dear friends, welcome to weekly view on markets. Market was up by around 1.5% during this week, and there was outperformance in mid and small cap sectors. Bank Nifty was leading as banks and financial companies have given positive business updates for September month. Trump tariffs continue to roil the markets as he announced 100% tariff on China on Friday. US markets fell by more than 2% on Friday due to Trump's tariff announcements. Our markets will also react negatively to this news on Monday morning. Most of the Asian markets and along with that Indian market also will open most probably in negative on Monday. It is a good time to buy when our markets fall sharply. So this sharp fall due to global development will give a buying opportunity. Quarterly result season has started with IT companies like TCS and Tata Elxsi. Markets reacted negatively due to muted results of TCS and Tata Elxsi. Investors have to look for companies with growth potential and trading at lower valuations. Common people who are not able to identify such kind of stocks should invest in mutual funds through SIPs. India growth story remains intact despite adverse global geopolitical developments and US trade war on several countries. Nifty has gained 391 points during this week and it gained 1.57%, closed at 25,285. Bank Nifty has gained 1,020 points, that is 1.84%, closed at 56,609. Mid cap index has closed at 58,697 with a gain of 1,194 points, that is 2.08%. Small cap index gained 1.43% with a gain of 255 points, closed at 18,133. India VIX has gained zero point zero 0.04 points, it is at 10.10. So India VIX indicates that there is no much panic in the market. Now let us look at various sectors. Information technology, after several weeks of weakness, this week it has gained about 4.89%. Healthcare sector gained about 3.19%. The US has excluded generic medicines from tariff. That is why we have seen good rally in pharma companies and healthcare companies. Private banks, consumer durables, pharma, NBFCs all gained around 2%. PSU banks, infrastructure companies, oil and gas sector, manufacturing all gained from 0.5 to 2%. Media companies lost around 2.69%. Defense, FMCG, metals, auto, and public sector companies all lost marginally during this week. Let us look at technical charts. This is the daily chart of Nifty. On the chart, if we notice, Nifty has been making higher tops and higher bottoms. So, despite the overall consolidation in a broad range, it is making higher tops, higher bottoms, which is a bullish indicator. And any fall in Nifty due to global news and developments is a good buying opportunity. Ultimately, Nifty has to take out 25,500, then we'll see Nifty going to higher levels. Now, Currently, it is nearing the resistance level. So we have to see whether it will be able to surpass this resistance level. If that happens, we will see a fresh rally in Nifty. This is the chart of Nifty mid cap index. Mid cap index is approaching the resistance line. This is the resistance line. So it will hit the resistance at around 59,000. And if it crosses that, then we will see a good rally in Nifty mid cap index also. This is the chart of Nifty small cap index. Small cap index is in this broad range, it is trending towards the resistance level, that is on the higher side of the band. Small cap index also has to cross 18,500 conclusively. Then we will see up move. Otherwise, it will continue to trade within the band. This is the daily chart of Bank Nifty index. We can see Bank Nifty index has gone above this band, consolidation band, and now it is crossed the resistance level of 56,100, and it has closed above this, much above this. The present closing is 56,609, much above the resistance level. So this shows that Bank Nifty has a lot of strength, and it is likely to lead the market in the coming week. India's macroeconomic fundamentals continue to be remain strong. RBI forex reserves for this weekend is at 699.9 billion US dollars. From previous week, it has just gone down by zero point 0.2 billion US dollars. So, forex reserves have been quite stable for past several months. So, this is a good reserve level for India. And RBI governor has stated that this reserve can take up some of the global shocks. Forex rate is at 88.69 rupees per dollar, and dollar index is at 99.3. When crude price has fallen to lower levels, it is at $62.73 per barrel. The lower crude price is definitely beneficial to Indian economy and Indian markets. Our dependence on crude is huge, so that will the lower crude price will help us to reduce the import bills, and also that will help us to contain inflation, which will give a room for RBI to look at cutting rates in futures. Gold had touched all-time high of 1,25,030 for 10 grams 24 carat. The unprecedented run in the gold is continuing as many of the central banks are buying gold, and also money is moving from dollar to the gold. Dollar index has fallen from 116 level to 99. That shows many of the central banks are holding their reserves in terms of gold instead of in dollars. FIs have started buying in Indian markets. They had been continuously selling for several months. This week they have bought 2,975 crores, and DIS continue to buy 8,391 crore in equity this week. If FIIs continue to buy, or even if they stop selling, our Indian markets will go to higher levels. HSBC PMI index for September has come. It has come at 60.9. It was 62.9 in August. So it is slightly lower in the month of September. But 60.9 is also a good index level. It shows expansion. Services index remaining above 60 for last 4 months indicate strong growth in the services sector in our economy, and this expansion is continuing month on month. If PMI index is above 50, it shows expansion in the sector. So we are much above that. It is around 60, 61, which is quite good. Trump has imposed a 100% tariff on China imports, after which US markets fell by more than 2% on Friday night. Asian markets, including Indian market, may fall sharply on Monday morning. Quarterly two result started with TCS and Tata Elxsi. Markets have reacted negatively to the results as company's profit growth was muted. Their revenue was not growing, profit was not growing. So that is why market has given a negative reaction to the news. So even though India's macroeconomic parameters broadly look quite good, Indian market is trading at a higher valuation. Nifty is trading at a forward PE of 19.5, assuming 10% earning growth. So, but even 10% earning growth seems to be very optimistic. So, at this valuation, companies' earnings growth has to pick up, which is not happening. And Nifty mid cap index is trading at 30 times earning, that is 30 PE multiple, and small cap index is trading at 27 earning multiple, PE of 27. So at this kind of valuation levels, we need good earning growth, which is somehow not coming into the companies. That is why we see market is very sluggish in last 6 to 8 months. The main reason is that there is no pickup in the company's earning. So because of lower interest rates and lower GST rates, earnings of the companies is expected to pick up in the next 1 or 2 quarters. It may not happen in this Q2 results. It will definitely, we'll see uptick in December results. So somewhere the turnaround in the earnings of the companies is in the corner. Investors have to look for stocks with good pickup in earnings and which are trading at a low valuations. And it is good time to invest in such companies. And if one is not having adequate knowledge to find out such stocks and do the research, they should invest in mutual funds, and they should continue their SIPs, and SIPs will take care of market fluctuations as we get average price, and that will help to get good returns in the long term. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions. We'll meet again next week. Thank you.